The Reserve Bank of India has followed several central banks around the world and increased interest rates by 40 basis points. Now, how exactly will increasing interest rates help the problem of inflation? Because Governor Shaktikanta was very clear when he said that the reason for increasing interest rates is you need to tame inflation. Inflation or mehengai is on a roll, we're all feeling it around us. So how will this help exactly? Well, firstly, the broad central idea is, and all central banks do this, it's their favorite weapon to beat inflation with, is if they increase interest rates, they increase the cost at which banks borrow. So banks now lend money to Aam Aadmi, you and me, at higher rates. So we don't feel like taking as many loans. For example, if you wanted to buy a new car and take an auto loan, you might think, let me postpone it, it's costing me more. Hence, demand drops. If demand drops, then economics 101 tells us that when demand falls, so do prices. So that's the basic premise, that let us dampen demand, clamp down demand, and maybe prices will fall. So the big question is, will this 40 basis points increase in interest rates actually achieve that purpose of reducing inflation or bringing some ease to the Aam Aadmi? The answer is probably it won't be enough, because we have to go back to why inflation has increased in the first place. Has inflation increased because suddenly there was a lot of demand and hence prices went up? To some extent. But a major portion and the major cause of this increase in inflation is because the cost of inputs have gone up. Supply side prices have gone up. So let me give you a very simple example. This water bottle, for example. Now, to make this, the manufacturer needs certain raw materials, and since it's plastic, one of those raw materials that they're dependent on is crude. Crude prices have been going up. Now, if you increase interest rates, you dampen demand, probably you or me will not want to buy this one water bottle at the same price. But that will not reduce the cost of making the bottle. So once it's a supply side driven inflation system and the cost of things and the cost of manufacturing has gone up, will dampening demand help beyond a certain point? It's unlikely. Either the central bank will then have to increase interest rates much higher to reduce demand that much, or then governments have to come in and give some kind of relief so that prices go down. So this is, in a nutshell, just the beginning. 40 basis points is not the end. Interest rates will go up much higher, and there's no guarantee that it will solve the problem of inflation.